Charlie Munger's warning to Gen Z investors. Some of us may not have heard of Charlie Munger, but everyone is familiar with investment guru Warren Buffett. Munger is Buffett's right-hand man, and the two have had unprecedented success building an investment firm with over $880 billion in assets. The investment principle that led to their extraordinary success is known as value investing, which was developed by Benjamin Graham. But why should young investors in their 20s adhere to a long-term value investing strategy? Charlie Munger has been managing investment for a long time, and the billionaire believes it has never been more difficult for young people to make and keep the money. However, Munger stated at the annual meeting of the publishing company Daily Journal Corporations in February that successfully navigating the investment world has become much more difficult over the last few decades. He also mentioned that after accounting for inflation, the cost of living in many parts of the United States is significantly higher than it has ever been. He predicted, "It's going to be much more difficult for the generations that's graduated from college now to get rich and stay rich. Think about how much a house in a desirable neighborhood in a city like Los Angeles used to cost." According to a recent filing, Munger resigned as chairman of the Daily Journal on Monday. He is still a director of the company and a longtime vice chairman of Warren Buffett's investment and holding company Berkshire Hathaway. In 1980, 2 years after Munger became vice chairman of Berkshire Hathaway, the median price for a house in California was $80,055, according to the Bureau of Labor Statistics. After inflation, that would be worth slightly more than $275,600 today. According to the California Association of Realtors, the median house price in California surpassed $800,000 for the first time ever last year. According to Munger, the contrast makes it difficult to provide one-size-fits-all investment advice to today's young people. For decades, his go-to advice was to own a diversified portfolio of common stocks, which he claimed could earn intelligent investors a 10% return. However, given how complex investing has become, this is no longer a foolproof strategy. "I don't think the future will provide nearly that easy of an investment opportunity for the guy graduating from college this year," Munger said. "This is different from seeing that young people can profit from wise investment. It just takes time." Buffett suggested avoiding single stocks in favor of the S&P 500, a low-cost index fund that holds 500 of the largest companies in the United States. At Berkshire Hathaway's 2020 shareholders meeting, it's a more passive investment strategy that reduces the risk of owning individual stocks, which can crash unexpectedly. At the Daily Journal's annual meeting, Munger mentioned that getting personalized advice could also help, but he said he thinks you'd have to figure out your level of skill or your advisor's level of skill. He would say to everyone who finds the current investment climate difficult and somewhat confusing, "Welcome to adult life." So, what are the lessons Gen Z can learn from Charlie Munger? Be rational, objective, and detached. It is easy to underestimate the importance of rationality to a Graham value investor. Still, it is our primary defense against emotional errors and thus significantly contributes to the investor's success. As a value investor, suitable investment opportunities appear infrequently, and you must be patient in waiting for them. And be ready to invest aggressively when one does appear. The Graham value investing system aims to reduce an investment's downside risk and, as a result, tends to outperform the market, most in a bearish stock market, while giving up some upside in a bull market. Create a safety margin by purchasing at a discount. To protect your investment from human errors, misfortune, or extreme volatility, buy a stock at a market price that is less than its intrinsic value, which is known as the margin of safety. Buying at a discount increases your chances of success. Create Mr. Market, not your master, but your servant. With his short-term, volatile nature, Mr. Market is a metaphor for the capital market. It will sometimes sell securities at a loss during the depressed phase and exaggerate what a stock is worth during the euphoric phase. However, if a firm's fundamental value remains constant, Mr. Market short-term views can be tolerated because they will be corrected in the long run. Buy stocks like you are buying a company. Approach any valuations as if you were buying the company privately. As a Graham value investor, you try to understand the asset's value. You need to fully understand the company's business model to understand the security's value. So it's best to avoid the investment. So, what do you think of Charlie Munger's advice for Gen Z investors? Let us know in the comments below and make sure to subscribe to our channel for more such uploads.